and welcome. Today we're going to look at the issues facing the United States as the President Donald Trump, embarks on a series of meetings ahead of the G20 with emerging markets, trying to reinforce the trade relationships the United States has with third countries. Clearly, one of the priorities of the Trump administration has been to bolster its trade links, but with an avowed intention of trying to reduce the persistent and significant US trade deficit by, in the White House's terms, pursuing more fair trade rather than purely free trade. Now, clearly, some of the focus of the Treasury and indeed the White House since the Trump administration has come into office has been on exchange rate manipulation by some significant trading partners, what is deemed to be weak currencies taking advantage of a comparatively strong dollar to reinforce the trade advantages that countries like within the Eurozone, like Germany, within wider Europe, Switzerland, South Korea, Japan, are deemed to have over the United States economy. But that also needs to be buttressed by the President's attempt to build enhanced relationships with countries outside of China, because clearly China has been the key focus of what is seen to be an unfair trading relationship, where the big export surplus from China is offset by a big export deficit out of the United States. And trying to introduce competitive pressures into the supply chain is not only good for US businesses and US consumers, but also makes the trade war slightly easier for the president to fight if US farmers, US manufacturers have a plausible fallback position in terms of their supply chain. So the president's recent visit to India must be seen in that context, and I would expect going forward, and certainly if President Donald Trump is successful in November in securing a second term, I think a really defining characteristic of his second term will be to try and make the US less reliant on that relationship with China going forward, such that some of the commercial pressures that it would like to bring to bear in terms of opening up market access for US firms into China and reducing the reliance on a single source within China in terms of the supply chain is less of a structural impediment to the US economy going forward. The challenge for investors is whether in that environment capital flows will go back into the US economy, because investors will be concerned that actually fair trade just means greater onshoring of activity and therefore dollars repatriate back to the US, bidding up the US dollar, or whether actually the lofty ambitions, the rhetorical ambitions to try and do more trade means dollars go and find their home elsewhere in other jurisdictions, bid up those currencies that are deemed as weak, and actually start to rebalance what has been a relatively strong dollar story, which has contributed to the trade deficit that the US sees. So certainly over the medium-term outlook, this is a key element of those appraising the relative merit of dollar investments versus third country emerging market investments.